Now, after nearly 2 years of aggressive interest rate hikes in a battle against inflation, the Bank of England has signalled that it's done raising the cost of borrowing, at least for now. That might be good news for some, but has it really won the war on inflation, which remains much higher than the UK's European neighbours? And what does all of this mean for your money? Welcome to Roundtable. I'm Enda Brady. Now, after COVID, the war in Ukraine and the lingering effects of Brexit, the UK's inflation rate remains stubbornly high. Consumer prices did fall slightly in August, and that surprise prompted the UK's central bank to keep interest rates on hold for the first time in almost 2 years. But where are they likely to go from here?
The plan is working.
That was the upbeat reaction of the UK's Chancellor of the Exchequer last month after inflation dipped unexpectedly. Official data showed that consumer prices rose by 6.7% in August compared to the same month in 2022. That was a slightly slower rate of increase than the month before. Economists had expected an acceleration. But that is still more than 3 times the Bank of England's target of 2%, and also far higher than the euro area's inflation rate of 5.2% in August, with an expected deceleration to 4.3% in September. As high as the UK's inflation rate remains, the August slowdown prompted the Bank of England to keep interest rates on hold for the first time last month after nearly 2 years of increases. The UK Central Bank's key interest rate now stands at 5.25%, about where it was just before rates were slashed to nearly zero to protect the economy during the global financial crisis. That makes life very expensive for anyone who has to borrow money for everyday living expenses or mortgages for their homes. So, do the latest inflation figures mean the Bank of England can start to reduce rates? The bank's governor says it's far too soon to be thinking of doing that.
I can tell you that we have not had any discussion on the Monetary Policy Committee about reducing rates because that would be very, very premature. Our job is to get inflation down. As I see it, we've got a big job to do. We've got quite a long way to go yet. It's encouraging, but I'm afraid we can't be complacent. And of course, we will watch the evidence very carefully, as we always do.
With many uncertainties on the horizon, like the possible impact of a worsening in the Ukraine war on oil prices, some policymakers see interest rates remaining high for the foreseeable future. So where could interest rates go from here?
Well, let's meet our guests. Joining me in the studio is Catherine McBride. She's an economist and fellow of the Centre for Brexit Policy. In Lancaster, in the UK, is Dr. John Whittaker, economist and senior teaching fellow at Lancaster University. And in London, Professor Keith Pilbeam, Professor of International Economics and Finance at City University of London. Catherine, come to you first. We've seen, 14 interest rate rises in 2 years in the UK. What kind of pressure has this put on household finances across Britain?
I think it's put a lot of pressure on, not as much as people imagined, because since the financial crisis, a lot more people have gone towards fixed interest rates, at least fixed for 2 to 5 years, so not fixed in the US sense forever. So that has meant that it hasn't hit people as quickly as maybe the Bank of England would have liked, but it will start hitting them now. But certainly it's hit credit card payments and other sort of personal finance borrowing, which will also have a knock-on effect on retail sales and things like that. So yes, I think it's been hard, but I think it's going to get harder because there are other problems. It's not just interest rates. So you've got people who are have been paying higher fuel costs, energy costs, food costs have been high. So there's been a lot of pressure on the family budgets, that's for sure.
John, as we head towards the end of this year, we head towards Christmas, a lot of households will be watching the news, listening about interest rates, looking for a glimmer of hope. Do you see any coming anytime soon?
Not much. I think the predictions out there are all that they'll remain rather the same. Bank of England didn't raise rates at the last meeting, but they certainly haven't said they're going to reduce them anymore anytime soon. And the predictions are that they might go a little bit higher. Well, I mainly look at the long-term rates actually to see what's going to happen, and also that gives an indication of borrowing costs for households, for instance. And the yield curve, if I can be technical here, says that interest rates are going to be remaining around 5% for the foreseeable. So don't expect any relief here. As Catherine says, some of the pain is still to occur, but I don't think it should get more severe. But on the other hand, it won't get any better. Sorry, I can't give you any more exciting news than that.
Keith, have you any positivity for us? What's your prediction about where things might go in the next few months?
Well, I'm sorry, I can't bring any good news. When it comes to Britain, there is no good news. We've got incompetence of the government of the highest order. We all know that. I mean, they haven't got a clue what they've been doing for the last 5-10 years, basically. But there is no good news because these interest rates are really going to kick in and hit property prices. Property prices are falling, but they've got more to fall. At these interest rates, you can forget that we've anywhere near the correction in property prices. And don't forget, when property transactions diminish, which is what's happening, right? First of all, we can see that plummeting 30-40% in sales. That means people aren't moving house. And when they don't move house, guess what? They don't buy new furniture. They don't buy new carpets. They don't buy new television. So this then starts hitting the whole economy. So we are, in fact, people are complacent. There's worse to come as the people get remortgaged. And then they've got record levels of taxation in this country. The taxation is through the roof because they've frozen the thresholds. So incomes are going to get squeezed more and they're going to get squeezed even further.
Catherine,
so we're not out of the woods. I actually think there's much worse to come.
Much worse to come. Catherine, I mean, are people out there in Britain feeling a sense of powerlessness over this? They tune into the news once a month. This Monetary Policy Committee meets at the Bank of England and people are told what's happening. Is there a sense of powerlessness, do you feel?
Well, obviously the one power they have is to strike for higher wages. And we've seen a lot of that happening recently in a lot of industries. And so that is the power. Of course, that also adds to inflation because industries to pay for higher wages will have to just raise their prices. I agree with everything that's been said. The only saving grace there is weirdly because house prices have been so high and because most banks have wanted up to 20% of a deposit to buy a house. There are actually not that many mortgages as there used to be. The amount of mortgages has dropped to about 10 million from about 17 million at the time of the financial crisis. And the loan-to-value rate is about 60%. So we've found that a lot of the people who do have mortgages are of a certain age where they are paying those mortgages down quite rapidly. And a lot of new people who could have been really caught by this have not been able to buy a house for the last 10 years anyhow, because the house prices were just astronomical and they were asked for much bigger deposits than my generation had to pay for, which made it very difficult for people to even buy a house. But I do agree, the tax burden is also adding to everyone else's woes. So it does look quite bleak, and I think that's why we've seen so many strikes.
I just want to talk about the issue of an impending recession. John, a lot of experts are predicting that the UK is heading that way imminently. What's your view?
Quite likely. Because I see the main problem here is the state of government finance. You know, the government spent massively over the last 3 years on the COVID. Well, they've done the same in the United States. We're supposed to be talking about the States as well. All these spending packages mean that debt levels in Britain and the US are higher than they've been for a long time. 100% of GDP in Britain, and all that's got to be paid back, or at least the interest on it has to be kept up. So the government has opted for this so-called austerity program of raising taxation. Keith referred to this, the tax burden has become enormous. The stupidest thing to do is to raise corporation tax at this moment, because that's a killer for jobs and business. Higher corporation tax, even if it doesn't raise very much extra revenue, it's a terrible signal. So I think the government is responsible here for doing far too much. It's held up employment over the last year or two by spending more and more, employing more people in the public sector. As the private sector sheds jobs, the public sector's been putting jobs on. But they can't keep that up. There's no more money left in the pot. There's the argument going on in Manchester right at the moment about more. Should we tighten up any more, raise taxes, or there's a group out there who want to reduce taxes? And Liz Truss's idea last year is coming to have a little more favour added to it. Maybe they'll come round to the idea that you shouldn't actually tax too much, because you will actually make the impending, if there's a recession, you'll make the impending recession even worse.
Well, Keith, surely all this talk from Conservatives recently about trying to cut Britain's taxes, the debt the government, the country is carrying is absolutely enormous. How's they ever going to get paid back if they keep cutting taxes?
The thing is, we've been printing money. The Bank of England has been printing money to finance the fiscal deficits. I mean, for COVID, we didn't borrow the money. The Bank of England printed the money to buy the bonds. 300 billion increase in the money supply in 1 year. Went from 600 billion pounds to 900 billion in 1 year. It was all financed by printing of money. The printing of money has now led to inflation. No surprise there. Anyone would tell you that. And it also, of course, it led to distorted interest rates. I mean, interest rates in the UK on 10-year bonds were 0.6% 2 years ago, 0.6%. Anyone who invested in them is now regretting that, because as interest rates go up, the price of those bonds falls. And pension funds have got into difficulty, insurance funds, there's been all sorts of mess. And of course, you can't keep interest rates down at that low because inflation's bound to take off. And when inflation takes off like this, no one is going to accept 0.6% interest rates. In fact, you've got to raise them. And the Bank of England was far too slow in raising them. But it's caused the trouble in the first place. They're blaming the workers. It was the printing of money that's caused the inflation. So we're in a real mess, because now the national debt has been going up far too quickly, because politicians thought they could borrow money at less than 1%. Well, they can't. And as that debt now matures, they've got to replace it with that. So interest payments on the national debt are going up from around 40 billion a year 5 years ago to well over 100 billion a year. That's 60 billion a year that you haven't got to pay workers, this and that. So it is incompetence of the highest order. There's no doubt that no one was thinking about this. Well, people like me were telling this is going to end in disaster. And we're still not getting inflation under control. People are still asking for wage rises because their living standards are, they've fallen last year. They want to catch up this year. So you're not going to get inflation down quickly. You're going to get it down. But 5%, even if Rishi succeeds, is way above the target of the Bank of England. It's
Catherine,
maximum 3%.
Just on inflation, Catherine, Spain has inflation at 2%. The UK currently almost celebrating having it down to 6.7%. What are the Spanish doing right and the Brits are doing wrong?
Well, oddly enough, I have no idea what they're doing, but I completely agree with the last two speakers. We printed far too much money. Now, maybe they printed less. Maybe they relied on the ECB to print the money for them. I'm not entirely sure, because Spain's economy is not an isolated thing. They'll all be responsible for some sort of payback of the printing of money by the...
Or is it just better governance?
I have no idea, but I can tell you that we printed too much money, and our corporate taxes increase is crazy, because the one thing we need is to encourage businesses to grow. And our marginal tax rate is also ridiculous, because we've got to encourage people to work harder. But if they dare to do that, we're going to tax them more. So we've got to fix the marginal tax rate. We've got to lower corporate rates back to where they were. And we've got to stop printing money, which we are doing. The money supply is coming down relatively rapidly. But as we've just heard, they printed 300 billion pounds in sort of 18 months. And that was a massive problem at a time when they could have borrowed it very cheaply. And instead of borrowing it, they printed it, and now we're paying that back at very high interest rates.
Catherine, can we mention the B word now?
Yeah.
Brexit.
Absolutely.
Tell me, what impact is it having on the UK trying to get out of the hole it's in? I mean, what's your assessment of it? It's been a disaster, hasn't it?
No, not at all. For two reasons. A, we have a tariff-free and a quota-free trade deal with the EU, and we've had that in place now for 3 years. And B, unfortunately, from my point of view, but maybe you'll be thinking the other way, our government has changed very little. And the one or two things that were different from the EU, they've changed back. So now we're aligned with the EU in terms of getting rid of petrol cars, for instance. So we're actually very closely aligned. So for someone to try and blame anything on Brexit is difficult.
But if you look at the figures, right, the Centre for European Reform, they say UK economy 5.5% poorer than had it stayed in the European Union, and they claim that tax revenues will be £40 billion higher by now.
Yes,
I
but
mean, Brexit's leaching money out of the country.
Those are not real numbers. That is their projection of where we would be had we stayed in Europe, which is now a nonsense. That's quite an old paper that was written some time ago. If you look at where Germany is, for instance...
So would you describe Brexit as a success?
Well, if you look at our trade figures, our trade with Europe and our trade with non-European countries have moved in lockstep. The only things that have changed dramatically in trade are things that did not fit in with the rules of origin. So things like clothing that haven't been made in the UK for many years, since the 1990s, nor are they made in the EU. We've seen a massive drop in trade in those because both of those goods are no longer counted as UK goods or even EU goods. So we're importing less from Europe and they're importing less from us, mainly because everyone's admitting that they're made in Bangladesh or they're made in Vietnam or they're made in... So trade with those countries has gone up and trade with the EU has gone down.
John, I just want to bring you back in. John, has Brexit been a financial mess for Britain?
I don't believe so. And if I may just add a point here, I'm rather pleased when I drive down the motorway to see it all British trucks going up and down, and not all those continental ones that come over from the EU. You know, all this trade that was going on between Britain and the EU, as Catherine says, a lot of it was just goods going back and forth. So when you bought some final good, it's been across the channel a few times. Are the more efficient actually just to keep it where it is? So we're saving carbon by not having so many continental trucks on our road. Well, that's perhaps a silly point, but I wanted to interject actually and put a slightly different silly point in here. And that is what's upsetting me most about this government at the moment, is that the Chancellor keeps on saying that he's keeping his promise to bring inflation down. And I fall off my chair every time I hear that from him, because firstly, it's not his job, it's the Bank of England. And secondly, it's completely out of his hands to do anything. Now, if the government keeps on making promises like that, there's no wonder that nobody learns to trust them, because you just lose credibility. He's trying to claim credit for something that he has absolutely nothing to do with.
Keith, I want to bring you in on the Brexit issue. How much is that playing into Britain's dire finances right now?
There's no way Brexit has been rosy for Britain. It's been a disaster. I strongly disagree with the other two people. We know it's a disaster. Look at what's happened to living standards, real wages. They're down. They blame it on Ukraine, of course. They'll blame it on something else. Brexit is an unmitigated disaster for this country. You can see the car production is half what it used to be. Half. Since 2016, it's halved. The trade figures are dire. The replacement and the rules of origin, the bureaucracy, the paperwork, it's incredible. The delays, the people aren't able to export their fish. They can stop them at any moment in France to check. So it's an unmitigated disaster. The labour supply shortages, the nurses, anyone who thinks Brexit has got anything rosy about it, there's nothing rosy. It's unmitigated. 5% is probably the accurate estimate. And that then translates not to 40 billion a year, far more in taxes than that. Because that would give you 100, we get about 45%. So you're talking probably more like 60 billion a year. And then, of course, the costs of Brexit. And plus, the bureaucrats are multiplying. All right, we've got more bureaucrats, vets to do this and that. Anyone who thinks that Brexit has not badly affected the British economy is living in cloud cuckoo land. It's every day it's becoming more evident to the Brits, who now want to remain in. They followed these Farage and Boris down the Brexit tunnel. It's been an unmitigated, and many people are now regretting it. And of course, immigration hasn't gone down. It's now at record levels because we import the labour from India, wherever we can get the labour on the cheap. and businesses have to pay much more for the visas and everything. So the idea that Brexit has not adversely affected not only this, it's destroying the government. The government doesn't have money to do anything because of Brexit.
No.
So the Tory party are actually destroyed themselves.
Catherine,
Believe it or not, they started Brexit and it's actually coming home to destroy them.
Catherine, tell me a Brexit benefit then.
Well, as he's just said, think about the immigration. Yes, we're still importing a lot of people, which I think last year's numbers was because they hadn't been able to import people during COVID. But now they're coming in on working visas. They're coming in skills where there are shortages.
Migration is completely out of control.
And they're coming in on visas that last for 3 to 5 years. I'm familiar with this because that's how I came into the country. Most people will go home after 3 to 5 years unless there's still a skills shortage. When people immigrated from the EU, they were entitled to stay here forever. They were entitled to go immediately on to benefits.
As Brits were entitled to live in Spain forever.
Yeah, but go on
France.
benefits or whatever.
Yeah.
Actually, in Germany, you couldn't because each country's own regulations applied. So if you went to Germany, you'd have to work for 5 years before you could take any benefits. Where if a German came to the UK, they didn't have to do that. So the difference between the immigration today and the immigration under the EU is massive because of that timing on the visa and the fact that we are selecting the people who come and they have to be in an industry where there is a shortage of staff.
But there's 46,000 people came here in small boats last year. And
Well,
the Brexit
that's-
was all
yeah.
about taking back control.
that
we don't
is-
see very much control of that, do we?
But that's also happening in the EU. That's not a UK thing and that's not a Brexit thing. That's an incompetent government thing.
Which government?
Well, I would say all of them because there are just as many immigrants arriving in Italy and Greece
But they
and
don't
France.
want to be in Italy or France. They want to come to Britain.
Well, no, not all of them. There are hundreds of thousands arriving in mainland Europe and there are tens of thousands coming into the UK. When you look at the actual numbers, every European country is taking a lot of immigrants. A lot come here because they speak English and it's easier to get a job in the UK than it is to get a job in France. As for the other costs, they are not Brexit costs. COVID cost this country a huge amount of money, not just in the money we were printing, but also we had shortages of goods. Our car production is down because we rely on imported computer chips, which come out of China and Taiwan. And
Via
during COVID,
countries like Germany, because the Germans run the car factory plants in Cowley and Oxford.
well, to a degree, but Germany also had a drop in their car production, and the US had a similar drop in car production because everyone was relying on computer chips that were coming out of China. And in 2022, this continued because China kept its factories closed. If you look at the present figures, all of that car production is back up again.
John, just on the Brexit issue, give us another benefit of it then. If you're a UK viewer looking at your mortgage rates going through the roof, tell me something positive from Brexit.
If we don't like what the government's doing, we could chuck them out. If we stayed in the European Union, we're still in the situation where the Commission and all the EU apparatus is making the laws. Fine, I'd much rather have our own government, even if they screw up, because maybe we've got a chance of getting a better one in the future.
So you'd rather have failure, even if it's British failure, rather than someone else to blame?
Silly. Of course we don't want failure. We just don't want failure to be imposed upon us by somebody else. That's the whole point of Brexit, was to take back control. Okay, we got that benefit, but we're not taking back the control. That's the problem with it. We could control our own immigration, but that means being nasty to a few immigrants. Nothing stopping us doing that. Except for the human rights legislation, which they're talking about doing something about. All right, you've got to be hard to get the job done, but we at least have a chance of doing it.
Keith, I want to ask you about Rishi Sunak's fate next year. Is his fate inextricably linked to the success or otherwise of the British economy?
No, he's out anyway. Doesn't matter even if we were to get some miraculous 2% growth. It just means that they're just not going to get so decimated as they were. So he's a dead duck, is what we would say. And he's going. It's a question of how much they lose by. Probably the longer he stays there, the more he's going to, because things are going to get worse. And you look to, so you're just clinging to power. And he's doesn't matter. It's a question of whether they can get, whether they end up with 150 seats, 120 seats, possibly below 100. I mean, the decimation that's heading their way, I don't think they realise. But the by-elections we're seeing, and it's not that, they're all telling you they're going to get decimated. And to be honest, they deserve to get decimated. I've never seen such incompetence, one after another, ever. And that's the cost of Brexit, because it started with Boris, then you had to be, Theresa May got in because of her Brexit credentials, and Liz Truss. It's one after the other, and he believes in Brexit. So all of them, this is what you end up with. And so it's cost the British economy in that way. We've got our own, quote, control. We don't have control. Never happened, because we still, actually, Europe can cause a lot more trouble if they want to. And so we don't have the control, and he's going to get decimated. It's just a question of how much.
Catherine, Keith and John, thank you all for your insight. And remember, you can see more discussion and debate on our YouTube channel. Search for Roundtable TRT World. But for now, from me and Brady and all of the team here, goodbye and thank you for watching.